Hit it.
It's Friday, December 17, 2021, episode 161. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome back to the show Chase Taylor from Pinecone Macro. We always love having Chase on, and this interview proved no exception. We chatted about nat gas, turkey, the Chinese Yuan, and ended with Chase's new favorite commodity that he feels the market is not giving enough love to. And then we have this year's final edition of Talking Charts with Patrick Ceresna, Lord of the Crayon Eaters.
This week in trading history, we discuss the bursting of one of the great commodity bubbles, and we end with our segment, Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer are we drinking today?
So today we're drinking Last Best Brewing Company's Show Pony Aussie Pale Ale.
Ooh. Ooh, that's good.
Something about the beer here. A bright and floral wheat ale featuring Galaxy hops. This is a crowd-pleasing pale ale with a soft mouthfeel. Best paired with steak pie, fish and chips, and of course, Vegemite.
Oh.
There was a strange
reaction.
There was a bit of an aftertaste. I'm like, it tastes so good, but what is that? What is that lingering taste like?
Vegemite. Oh, don't even get me started. I don't understand it. I think North Americans no North American that gets it.
It's one of those things. It's an acquired taste, right? Like the first time you tried, you're like appalled. You're like, "What is this?" And then,
usually
after
the
a while,
first time
like,
is also the
want
last time you try it because it's so bad.
Anyway, we have some housekeeping, right, Kev?
That's right. Well, Lena, why don't you hop on, tell people about the merch, and then tell people about next week.
Oh, right. So if you haven't checked out our merch store, please give us a shout and give us a visit at markethuddlemerch.com. You can find our Market Huddle merch and also Lord of Crayons merch there. And next week, we are taking a little bit of a break, giving Lena a bit of a break from these two. So we won't have an episode for Christmas Eve, but we will be back for the 30th of December.
With a great holiday
special. It's
going
to be a good one. Holiday special.
That's right.
All right. Let me do the side effects.
Yes.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include rheumatoid arthritis, a wobbly wedge, and acute alpha deficiency. I like that one.
All right, let's get to the interview with Chase.
It's our great pleasure to welcome back to the show fan favorite, longtime guest star, Chase Taylor. Chase, thanks for coming and finishing up the year with us.
Yeah, it's great to be on. I appreciate you having me.
Oh, it's always great to hear from you. You've had so many great calls throughout the year. I guess when you were on the show last time, you really leaned into the coal and uranium, and they just took off.
Yeah, that worked out. That worked out okay.
We're hoping that you can repeat that, and it's maybe the Market Huddle / Chase Taylor effect.
I would like to think so, but probably not. And since I think every time I've been on the show, I made a call that worked out. So whatever I say today, you guys should probably just go short.
That's right. We're going to goocher it by talking about it. We if you bring up good luck like that, it's going to inevitably work against us, and I think that's what'll happen here.
Yeah, let's hope not. And plus, I'm always terrible in January. Like I just have a drawdown every January. So that's
do you really reason. You find January is a tough time?
I don't know what it is, but I just always even December too. December, January, I should just stop trading. Especially January though. I start every year with like a 20% drawdown.
Wow, like that's interesting because for me, I understand the December. Well, actually, no, I don't, because usually. For me, it seems that all the crappy stocks that I'm long with all the other degenerates, the hedge fund guys mark them up at the year end for me.
That makes sense. And I honestly, I don't even have a theory on why it happens January. I mean, December's kind of just a mess and it's thin. Like that makes sense. But as far as January goes, I don't know what happens. Maybe it's just a coincidence.
I think that the smartest people this year were the ones that. I guess about a month ago, I saw some people say the year's over. I'm reducing positions and I'm taking the rest of the year off.
It's funny because I talked to a good friend of mine, and him and I basically had a pact. We were about to do that, but we were just trying to get a little bit more out of the lemon. And then here I am, like I should have done it the day we talked about it, not waited to get more. But that's how it works.
That's a great line. A little more out of the lemon. I don't know about you, but I've had it's been a tough couple of months. It just seems to be that whatever I can't seem to do anything right. It's been choppy all over the map and difficult. Have you found the same thing?
Yeah, that's pretty much exactly what I've experienced here in the last about 6 weeks or something.
Yeah, it's just it was one of those things that even my shorts that I had on were things like Tesla, and they ripped on me. And with the volatility going up, you inevitably do the wrong thing at the wrong time. And although I did manage to scrape some things back out, it was one of those periods where the market tone had shifted, and it's so difficult during that shift to maintain your profitability, because up until that point you've been conditioned to not shift and to continue to trade a certain way. And then once it changes, you inevitably have to have a drawdown almost, or not do as well, because otherwise you're forecasting a change in trend.
Yeah, exactly. And that kind of reminds me of, going back to the September FOMC, like it kind of messed everything up, but then, a couple months later, everything was kind of back to normal. So if you just sat there and rode through that, you did fine. And so you kind of want to do that again, but then you're nervous, like maybe this time is, going to be a little harsher. It's tough.
So what do you think about the FOMC and Jay Powell and the crew? Do you think that they, I like to say it, they have the green light for tough love? Do you think that that's an accurate assessment, and that they're going to continue to disappoint capital markets?
I don't think they'll disappoint capital markets like too much. And I think, having 3 hikes priced in at this point and speeding up taper, without having a nasty reaction to that. I mean, before really here in the last couple of weeks, you look at the 2, how much it had already moved up. Like the market's already done a little bit of tightening for them. It's going to be hard to get much more hawkish than that, unless, after the kind of early year base effects roll off. And obviously, if you're still having, these nasty prints of like 6, 7, 8, maybe they have to accelerate even more. Because at that point, I would assume they're getting afraid that they're behind the curve, not just everyone else. But yeah, I think you can make the case for peak hawkishness already in a sense. So I can easily see them staying behind the curve enough for the market to not sweat it out too much.
Yeah, so Chase, I'm with you. And one of the things, though, that I find interesting is the fact that the fixed income folks, they seem to understand it. They've gotten the curve. As you mentioned, they put in a fair amount of hikes in there. They've they flattened the curve because they've already looked and said Fed's going to tighten and it's going to cause the economy to slow down. Yet I was kind of shocked at chatting with a buddy before this most recent FOMC meeting, and he was telling me how they were going to raise rates at this meeting. They were going to taper fully and raise rates. And I was like, you're kidding, right? Like I was asking him, you're kidding. He says, no, everyone, all my buddies are talking about this. We're talking about 1 hike or maybe 2 hikes. I said, that's not the way the Fed works. And I found that the stock folks had really talked themselves into almost a Volcker moment of them just clamping down on it. And when people were kind of confused about the fact that Powell didn't seem that hawkish, that dovish, yet the stock market rallied, I think it was because those stock market folks had priced in so much fear that he was going to be so hawkish.
Yeah, the price action absolutely supports what you just said, and I think I found it kind of confusing day of, but now that you say that, that makes a lot of sense. It almost has to be that the way the price action worked out that day.
Yeah, no, I completely agree in terms of that's explains that day. Now, unfortunately, it doesn't seem to explain the next couple of days where it seems to roll over. I attribute it to Omicron fears, but do you have the same interpretation?
Yeah, and that's one of the things drives me crazy on FinTwit is all the people have been like, just no matter what, it's not about Omicron. No matter what it is, there's so many people always screaming this has nothing to do with that. But to me, it's clear it does. It just follows the news flow too well for it to not be a significant impact. And you look at oil, for instance, the data's been just tremendous lately, just as far as barrel counting goes, but it's been struggling. And I think it's because especially in Europe, people are just screaming from the rooftops the worst thing ever, and we're going to have to lock down again, and hospitals are going to be overflowing. Like that news flow has to be weighing on folks, I think.
Yeah, I agree. I was watching the tape today, and one of the guys on our desk sent off the recent Reuters article that said that the severity of Omicron was not any lower than Delta or Alpha, and immediately the stock market went offered. And so I come to the same conclusion. We are trading, at least at the short run, on each and every Omicron headline.
Yeah, and it's funny you mentioned that piece. Like something I found interesting is, when this kind of first happened on that Friday a few weeks ago, coming out of South Africa, everyone's like, "Oh, we don't have enough data yet. Let's wait a week." And then a week happened, and it was like, "This doesn't look that bad, but that's not enough data. Let's let another week go by." And then we just keep doing that, and now we've kind of reached the point where the data coming out of South Africa is enough to, kind of make some conclusions on. And instead, everyone's like, "Well, that's just South Africa. Like, we're gonna be doomed here in the UK." Like, well, okay, but you guys said this late for the data, and the data's actually been suggesting that it's not as bad. Like, from everything I look at, and obviously I'm not an expert at all, but from everything I look at, it does look significantly better for outcomes. Obviously, case counts are going to be high, but I think we've reached a point where case counts aren't the important metric, at all.
Yeah. So do you think that this could be the end, in that if this thing just rips through society, which it increasingly looking like it will, and let's assume that the severity of it is not as dire as everyone thinks or worries, and then it just kind of flames out in this final kind of Peter. And my question to you is, if you do believe that, when do you think the market figures that out?
So I'm not 100% sold on that being the outcome, and I actually wrote a piece specifically about that. Like the weekend this kind of first all happened, like hey, this guy could actually be a good thing, and explain why. But at the same time, we thought herd immunity was like the thing to get to, and then we got to herd immunity, and then we realized that doesn't really matter. Neither do vaccinations as far as case counts go. Like, you can still get it. So it's clear to me, like, the severity, hospitalizations, that's the stuff that matters, and that, I think, can be significantly better, which the market should realize is, from a market perspective, is more or less the end of this thing, even though I expect it to come back, and as far as cases go.
Right.
But one thing I think people are kind of missing, especially out of the South African data, is it's an early study, it's a small study, so I think we do have to take it with a grain of salt, but showing that the time people spent in the hospital going from roughly 6 days to 2 days, like that, you do the math on that, and that's pretty significant, when it comes to overflowing hospitals. So even if that trend stays close to that, I think just the outcomes are so much better that you don't have to do the lockdowns. And I think that the case study for now is the UK, because they're freaking out hardcore. Cases are exploding higher, so it all comes down to what happens to hospitalizations there. I think if hospitalizations don't make a new high or come even close to the new high, and with just extreme case counts, then that should be the moment the market goes, oh, okay, it wasn't just South Africa, and this happened in the Northern Hemisphere, where we're in the winter, okay, this thing's actually going to be okay. And that's the point where I think markets kind of let go. So I'd say 2 to 3 weeks from now, if data is looking good on hospitalizations in the UK, then you can get the risk on stuff focused on something else.
It's always so difficult to kind of pinpoint that moment when the market figures it out, isn't it?
Yeah, it is. I think I think you can build a window of time, but kind of getting that right down to a level is just impossible.
Right,
you can only get close.
But so you could foresee a situation where we have the market realizing that the end of this perpetual lockdown / worry is behind us. And given that, if you do believe that, what do you think about the market in general from here? Do you think it's something that needs to be bought?
I don't know if it needs to be bought. I mean, obviously, we've reached pretty significant levels to begin with, and liquidity, regardless, is going to be coming out. So I mean, I expect financial conditions to tighten up over the next year or two. So, I mean, you can make the case like that. I think there's going to be more volatility. I think stocks will struggle to go higher. But at the same time, all it's going to take is that first like 10% drawdown, and everyone's going to go to the other side of the boat and freak out. And then, we'll probably be back at new highs after a couple months after that. Especially when everyone, starts pricing hikes back out and stuff. I don't know if that'll happen in 22, but by 23, I wouldn't be surprised. So, I mean,
well, the
I'm
market,
not long or short, the indexes at the moment is kind of watching.
Yeah, and the problem with the indexes is that they become so lopsided. Like when you're, for example, you look at the S&P and then pick up the first top 6 or 7 stocks, and they're all tech stocks and big, huge monster market caps with crazy valuations, and you say to yourself, do I really want to own this? Like, is this something that I want to be investing in? It's almost become a farce.
Yeah, there's just so much inherent fragility in that. It is kind of scary to be there, but at the same time, all those passive flows are just going to keep just buying that top 5 in bigger and bigger size as we go along. So the math kind of works out that way. I think if something ever interrupted those flows, that's when you could have just a really ugly problem. But
I think the question for 2022 that investors need to be asking themselves, and I'm going to ask you, is can we get a rotation out of those FANG type tech names without causing a moderate to severe drawdown in the index themselves?
So I think we could do it without the severe one. I don't know, but I think without moderate will be difficult. But we had a period, what was it? I can't remember. I think it was 2019, where tech had a pretty decent sell-off. I know it was 2020 maybe. Pretty decent sell-off, and then you started getting value kind of moving higher and small caps moving higher. And I remember being like really impressed with how strong the overall market like held in, despite the fact that kind of the generals started to kind of fall off, and
right.
And so maybe it's possible to do better than people think. I remember being really shocked by that little episode.
I look at it, and I look at how much the market cap of those generals, and I think to myself, if they take that money and just move it into these other names, the moves are going to be just obscene.
That is very, very true. And you look at stuff like, energy has had, even if you pull up the crappy ETFs, they've had a really nice run, but obviously not near as good as some of the individual names. But if you plot them against the Nasdaq, they still look horrible. Like they haven't even really broken out of their base against the Nasdaq. So that's a perfect illustration of if you got a reasonable chunk of FANG money that found its way into something like materials, or like the move it can make is huge.
Like I don't actually know the numbers, and I'm not at my terminal right now, but I'll bet that you could take those FANG names and buy every single energy company there is. Like
I have no doubt about that.
Yeah. And I'm wondering even if it's something more obscene, like the top 2 would buy the whole energy complex. Because if you and the one thing I like to remind people is the energy at one point was 20% of the S&P. What is it now? 2?
Yeah, it's something stupid low.
Yeah, so you listen, that would be terrific for you and I, because we're not ones that are embracing those FANG type names and are more prone to some of the other type value oriented names.
I still work for a living, though.
And so that's a great line. Jeez, that made me laugh. Sorry, you caught me off guard, buddy. So I was wondering, let's talk about some stocks. What, I mentioned the uranium and the energy and oil and gas. Those were great calls last time. I think as well, you were a coal kind of supporter. Why don't you just give us a quick little update on where you stand on those, what you think 2022 has in store for those groups?
Sure. Still absolutely love oil. The fundamentals are still great. Obviously, it's going through a rough patch now, and that may continue even for 6 months or something. I think as far as the actual supply and demand, that's going to continue to be good. But sometimes that can be really good, and prices don't care. So I think we're just in one of those rough patches. Natural gas is super interesting because it's there's basically just two markets. There's the U.S. and the rest of the world. The rest of the world prices are basically 200 or more a barrel a day, or barrel equivalent. So just sky high nat gas prices in Europe and Asia, where in the U.S. have been struggling mostly because of weather. Like we've had a really warm November, December. So I mean, gas inventories are still below the 5-year average and still well below last year. But at the same time, you keep having this warmth, and there's going to be problems in nat gas short term. But I do think the weather. Go ahead.
I'm sorry to interrupt. Why don't you tell people what's happening with nat gas in Europe and how that developed, and just to get a better sense of maybe understanding, is it specific to Europe or is this something that we could experience here in North America?
Sure. So we can experience it in North America, but not nearly on this scale. So what's interesting is going into last winter, they had the highest inventories they've ever had, or they were doing great. But then winter kind of drug on really late, so it kind of went into March and April, and that depleted their inventories significantly. So they kind of went into the summer in a bad spot. They really needed to rebuild inventories, and they weren't able to because demand for electricity was high. They had some heat waves that had a lot of demand on them. Imports from Russia have been kind of disappointing for them, which is obviously very interesting from multiple angles. And you keep decommissioning nuclear plants, and you keep closing down coal plants, and the wind stops blowing, and then you have to just depend so heavily on natural gas, so that demand for natural gas in Europe has just kind of gone parabolic in the last 18 months, and supply has not only not gotten better, but it's gotten worse. And there's been a lot of short-sighted policy of reducing.
They don't seem to be changing or learning.
No, not at all so far.
That's kind of the most amazing part of this.
Yeah, they've done what Europeans do, and they've talked about it a little bit, but they haven't done anything. But it's just like everything else in Europe. It's really difficult for all those countries to kind of get on the same page and make real policy. So,
one thing that fascinates me about them is that, like, you think at a certain number, it causes people to sit up and notice. Surely we've hit that number.
Yeah, I mean, we're already to the point where national governments are having to subsidize like people's heating bills and power bills because it's so extreme, and we're already to the point where we're taking smelters and fertilizer plants and things of that nature offline, the kind of industrials that need significant amounts of energy, and where it has a dramatic impact on their margins to the point where there's no point in them producing anymore. So you've had kind of industrial demand destruction, but you've also had household demand subsidies to keep them you don't get demand destruction when you do that. So it makes kind of an interesting push-pull.
Right. And so we had this huge spike, and just to give people an idea, you mentioned $200 a barrel oil equivalent. Is that correct?
Yeah, and in fact, I know yesterday a TTF sold off some today, the European gas contract, but yesterday it hit $250 oil equivalent, which is, I mean, that's just astronomical, especially when Brent crude is like not even half that.
That's right. And so that equivalent is what you take the energy equivalent of the natural gas, and you convert it to oil equivalent.
Right.
Right. And so if they were a perfect substitute, and I think they can be substitutes at certain points. Some energy plants can burn. Am I right? Diesel? Have I got it right? Do they burn?
Yeah. So you can actually still use an oil product to burn for electricity, but it's not really done much in North America. There's a little bit in Europe, and actually a good bit in Asia, and we've already seen some of that switching. But I did some analysis on it, and I want to say like about 3 million barrels a day is kind of like the most you probably get to.
Okay. And so that was $250 barrel equivalent, which is just kind of mind-boggling.
Yes.
Yet here in North America, we did have a little bit of a bull market in natural gas, but then, as usual, it disappointed. Yet you're still bullish. Why don't you lay out why you're bullish on North America natural gas and how you're playing it?
So the reason I'm bullish is, for one, I still think we can have a cold winter. There's a lot that goes into that that needs to change. It's kind of nerd stuff. I won't get into it, but
no. Actually, you know what? I've seen you talk about and be posting things, and I read your stuff, and I see this. There's some big, huge polar vortex or something. And I thought to myself, that's actually quite interesting. There's not a lot of people talking about that. So why don't you be like the Weather Channel nerd and teach us about the polar vortex and why this might affect our trades?
So the polar vortex is part of it. Obviously, whenever it's kind of over in North America, it kind of just sits on Canada. And right now, even in the next couple of weeks, it's going to be kind of sitting on Canada. You guys will be very colder than normal, and we'll be warmer than normal unless something called the MJO, which is kind of like this Pacific convection. It's kind of moves west to east, and this thing can get stalled.
Is that the airstream? Is that like the
sort of? It's
okay.
It's so it's not like an actual like airstream per se.
Okay.
But it goes through 8 phases, and each phase kind of correlates to certain weather patterns in different parts of the world. So we've been kind of nailed down in 6 for a long time so far, like this fall, and then right now we're in 7, and those are fairly warm for the U.S. If it can get into 8, and that's like literally this thing just has to move a little bit further east, and then you are in phase 8.
Does it go to 11?
No, it actually just 1 through 8, and it can like cycle back through different numbers. Like you can imagine like a circle almost. It's very strange, and I'm not going to pretend to fully understand it the way some smart weather people I know do. But
and is 8 associated with cold?
Yeah,
over
8's cold.
You guys, not us.
Correct.
Or both of us.
Well, it'd be both, but essentially what that allows, what helps allow is for the U.S. to pull down those like really cold Arctic temperatures down to like lower latitudes. So right now, like we get them a little bit, like in Maine and like Washington and stuff like that, maybe North Dakota, but for them to kind of like pull down into, like mid-Atlantic and in the Midwest, things like that, you have to get in that phase 8, and then you have to, so at times have a disruption to the polar vortex where it gets squeezed or stretched in a weird way, or sometimes it almost gets like split into 2 from high pressure systems that squeeze it together essentially.
Can I ask how often does this 8 happen? And is this like an outside, like, is this something that occurs once every 50 years, or is this something?
No. It's like a very regular, like kind of small scale, like cycle, and it's
almost like Farmer's Almanac type stuff. Like, and it's just somewhat predictable.
I wouldn't even call it somewhat predictable, because like it's the thing that's screwing them with models right now. It's like weather models. There's like 3 major weather models that everyone follows, like hardcore weather gas traders, and so that they can't even agree on it right now, like at all. So the U.S. one is showing basically going to phase 8 and getting really cold here in about 2 weeks, whereas the European one is showing the opposite. It's still seeing phase 7, and it's staying really warm in the U.S. So it's very interesting. And then you have the people that know how those models work, and then they try to game it out to figure out what's coming next on the models, and they're even confused. So at the moment, it's tough.
So that's fascinating. So there's like different schools of thought, like MMT versus hardcore money guys in the weather world.
Yeah, absolutely. And so it's a perfect example of that is this, there's a giant MJO debate right now, and some people think a typhoon was kind of tricking the models because it was moving east to west, and that's something I think is possible. So you could get into a situation where the typhoon has kind of made landfall a couple of days, that stops impacting the data, and then the European model may see that differently and go, oh, okay, like MJO is going to move east into phase 8, and then it would all of its model runs would push into like really cold, the same as the US one is at the moment.
Okay, so here's a question for you, bringing back to markets. Is the market pricing in a 7, or is there some anticipation for an 8? So meaning that if we don't get the 8, the nat gas is going to sell off. Like, how much of 8 is built into the current prices?
I don't think it's built in very well. So I think it will go either way. So I think if like say, I don't know, Tuesday of next week, the models are just like, no, we're staying at 7. Like, this thing isn't happening anytime soon. I think you have a big sell off, even from the fact that we've already sold off $1. Well, I'm looking at April contract, more than that probably on front month. But at the same time, if you get that 8 and all the models start agreeing that it's going to be colder, then I think you can jump back up, near 4 pretty quickly. So once you start watching these models, for anyone out there that maybe trades gas but doesn't pay attention to the weather stuff in the winter, if you watch the model runs come in, I mean, there's clearly a lot of algorithms built right off the models because they react very purely to the weather models.
And are these models things that people pay for? So therefore, someone will get it early, kind of like an ISM print.
Yes.
Okay.
So they're expensive, and some of them, or most of them, like they just come straight from national governments. But if you want a lot of like real time data that's coming through, they charge a lot of money. And then there are people naturally that parse through that data and tell idiot traders like me kind of what it means, and then they charge money. But but they get all of that data and look at it. So
what time should be like? When is the model dump? Like should we be watching for that?
So they're kind of always updating. But what I've noticed is a lot of the like weather services tend to put out 3 different kind of daily model runs. But the way I understand it, it's pretty consistently rolling over and giving out new data.
Oh, okay.
But that's the kind of thing that costs a ton of money if you wanted to, I think, plug into like the no kidding like real time stuff.
Okay. And now walk us through. So you think there's a good chance for 8, that the market's underestimated the chance for 8, but yet I suspect that you think even with the 7 that it's not the end of the world and that the nat gas has a chance of heading higher. And also, how are you playing this if that is the case?
Yeah, so I'm essentially a structural bull, more or less, and a lot of that's like LNG exports, going higher and higher. That's something that when you compare it to 5 years ago, like you're not going to see, and I think it's significant. Kind of a weird thing, but in the U.S., we're kind of like our coal inventories are extremely low, and most coal utilities have essentially gotten all the coal they can get for the next 2 or 3 years already contracted. So you could get into a situation where you kind of don't have a coal to go to, for gas to coal switching, which we always get whenever gas gets expensive. So that's something where I could see it tightening up the gas market, just because utilities just can't go, oh, like whatever, we'll go burn some coal because they're not going to have it. But as far as playing it, I'm in personally in April of 2022 futures because I think the winter can kind of run a little longer than March. It only trades at a 5-cent discount to March at the moment. It was like $1 something a couple months ago, which tells you how bearish people have gotten on nat gas for the rest of this year and the next year. But I mean, I still have a lot of equities, but I don't trade those really actively. I think the best play for the rest of this year is probably Sandridge, just because they don't really hedge, and so they'll get a lot of that pure price action the way a lot of the others won't.
Oh, is that so? That's a problem. A lot of these nat gas companies hedge too much.
Yeah, a lot of them hedge a ton, which in an environment like we've had for the last
decade,
I'll say like the last couple months where we've had bearish weather. I mean, it's really helped some of those.
But not only that, over the long, it's only been until the last year that there hasn't been a kind of a terrible trade to not be short.
Yeah, that's right. For sure. I got long in March of 2020, which kind of was like really right around that bottom because of the Saudi Russian like price war to see how low we could get prices. And that was kind of the bottom. And yeah, before that, it had just been like a decade of just pain.
Oh yeah,
it's just obviously with a couple little quirky like jumps higher, but
it's like being long VIX.
Yeah.
Like, yeah, you have the occasional weathered or sorry, optionsellers.com squeeze or whatever.
Yeah, exactly. It was a gas.
And otherwise, you're just bleeding every single day.
Yep.
Okay, so Sandridge is your number 1, and then you hold some April 2022 contracts. Okay, let's go on to oil. Is it still the same story? It's just we're not allocating enough capital. There's basically been disinvestment and demand's going up.
Yeah, exactly. I think most of the guesstimates from Wall Street get demand wrong, and that's already proved out this year. And I mean, the U.S. just hit a new kind of all-time high for this time of year for oil demand, and we've seen significant comebacks for demand in places like, well, basically all of Asia. I just think everyone's just systematically underestimates demand, so that alone is a good thesis. But on the supply side,
do you have any theories as to why that is?
Honestly, I think people are just too caught up in the energy transition and the green stuff.
They're assuming it's going to go faster than it is.
Exactly. So I know you've seen like those 10-year yield like charts, and then it shows all the guesstimates of it going higher, and then it just never does.
Yeah.
It has like all those little lines coming off of the forecast just being dead wrong. To me,
Right.
that reminds me of what happens in oil, where everyone's always predicting, we're all going to have our own windmill and solar panel in the next 6 months, and
We're
it's
going to
keeps
sing
never happening.
Kumbaya and
Yeah.
everything's going to be great.
I think you could probably make the same chart. Well, I mean, I have seen some similar charts of, over the last 20 years of all these energy transition predictions that are just kind of comical now.
Well, to me, one of the big things I think a lot of people miss is the hockey. I call it the hockey stick formation of energy use per capita as a society gets richer. And you see it in Japan after World War II. You see it in Korea in the 70s and 80s. And I think China's about to experience things that. So I could see a situation where the energy use per capita on the average Chinese person goes up, doubles in the next year. I mean, sorry, not next year, in the next decade, let's say. And I think that a lot of people are just assuming that they're not going to go and get air conditioners, they're not going to get cars, and they're going to hit a certain level of wealth, and it's going to explode.
Exactly. And air conditioners is like one of the things I always point to, because so many people in really warm parts of the world don't have it. And I guarantee they want it, and I guarantee when they have enough money, they'll get it. And that it's a significant, electricity demand source. So we're not going to have enough windmills and solar panels to make that work. So even if the percentage keeps winding down for fossil fuels, the actual nominal value is going to keep going higher.
We're talking about energy, and I know that one of your recent kind of off the beaten track trades is being Euro Noki. Have I said that right?
I don't even know how people say it, but yeah, the Norwegian krone.
Right.
So,
I think they say Nokia, or at least that's how the cool British people say it.
That's a phone where I come from, but yeah. So this one I feel really strongly about. I wrote a big winter piece talking about how I thought the winter could be cold, which to be totally fair, in the U.S. it is absolutely not. It's not only has it not been cold yet, although granted winter hasn't even technically started, but it's been super hot. So from the U.S. perspective, I've gotten it wrong. Europe and Asia have been cold, but something I kind of look back on, and I should have put in that piece, which I'm talking to clients about now, is that cross, because unlike most of Europe, Norway actually produces and exports a lot of energy, and I think everyone knows Europe gets a lot of their natural gas from Russia, but they get a lot also from Norway. And not only that, but state-owned companies in Norway. So I think you get in this situation where energy prices are incredibly high, so that the price that Norway can get for especially natural gas, but also oil, is really high. So you have a lot of money moving from Europe to, from the Eurozone to Norway, which just in its own is really good for the currency pair. But then you think about the demand destruction in the industrial sector and what that's going to do to growth in Europe. And you start to, you kind of start to realize well, growth can really slow down in Europe if they start turning factories off so that they can save electricity and heat, where they're not going to have to do that in Norway. So I think you can have a pretty massive growth divergence. You can obviously have just basic trade balance divergence. Not to mention Norway just raised rates, and obviously the ECB is not about to raise rates anytime too soon. So it's positive carry. It is, to me, that trade offers a lot, and it kind of offers a lot of right tail exposure to this energy crisis getting worse for Europe, because every little bit that energy crisis gets worse for Europe, it gets better for Norway essentially.
That's a great trade. I like it. It is off the beaten path. And speaking of which, one of the reasons I like it is because it's not just another equity trade. It's the currency trade. Something that is a lot of people have forgotten about, but I really think is going to come back in vogue before this whole next cycle is over. And the other currency that you've been watching with a lot of interest lately has been the Turkish lira. And I mentioned this when we were talking about it, and you said, "Oh yeah, I like to trade it." And I say you're a lot braver than me, Chase.
Well, the funny thing is, like the reason you usually don't want to trade it is because the carry was so ugly.
Oh yeah.
But when the guy keeps cutting rates, I mean, he kind of helps you. He kind of helps you short it. Yeah,
That is a
I
great
just never
point, though.
see.
You know, a lot of people don't understand, Carrie. They'll look at a trade, they'll say, "Oh, this is a great trade. It's done really well," and they'll just look at the nominal price, not realizing that they're bleeding because the interest rates are 11 or 12%.
Yeah, it's funny you say that because the best performing, well, last time I looked at this, maybe 2 weeks ago, but the best performing currency in the world on a like carry adjusted basis was Argentina, and I don't think anyone would guess that. But it's true just because their interest rates are pretty high. So
yeah, that's right.
yeah. With Turkey, I mean, I just never see anything like it where the person in charge they can do whatever he wants. He can fire everyone and put the right people in place to do what he wants. And his idea is the exact opposite of what he should be doing, and he just keeps doing it. It's normally you have like some self-correcting mechanisms where people can't get away with stuff like this, especially like a big country. Turkey's not Zimbabwe. It's a big, important, fairly wealthy country.
For sure. Yeah.
They're significant, and they're cutting rates to get inflation down, and it's not working.
The
it's
meetings will continue until morale improves.
Yeah, and they just did a 50% raise for
minimum
for
wage, right?
Yeah, so that's probably not going to help inflation.
Well, that's what happens when you have your currency. You got to adjust your wages.
So now, not only do they have the crazy guy like cutting rates, but they're going to have kind of a little bit of a wage price spiral issue. So, I mean, they're essentially already out of FX reserves and more or less are out of ammo as far as intervening. So that's always been another scary thing whenever you're short a currency like that. It's the central bank kind of punching you with an overnight move that moves the pair a good bit. They have been intervening here lately, but there's only so much they can really do from here on out. They're gonna have to either raise rates and take a lot of pain, or get rid of their president fairly soon, or it's going to be a societal collapse, people in the street kind of problem very quickly, because it's devolving fast. Last I saw today, and it was probably an hour before the close, but Turkish stocks were down 14%. So it's starting to kind of get worse fast. A giant surge in their CDS today. So
I love it, Chase. You're trading old school macro. You're talking about things like central banks intervening, which used to happen all the time. Used to be fun. People probably don't realize, or many people don't realize this, and just us old timers remember. But like the Bank of Japan used to come in and intervene in the yen market all the time.
Yeah, absolutely.
And currencies have been so boring, so it's nice to see some action. So, how are you playing it? What are you doing there, and what do you see? How do you foresee this kind of unfolding?
Yeah, so I've been predicting doom in Turkey for like 5 years, so that's worth noting. But and I've shorted the currency off and on a good bit over that like 5 years. I haven't been doing it much lately. Now that it's the best time ever to do it.
That's right. Well, that explains why it's working.
Exactly. Yeah, the shorts are welcome on that. But I've been shorting the ETF, the equity ETF, which is kind of
has an embedded currency component to it.
Yeah,
as well.
It definitely does. Yeah. And it's obviously breaking down with what's going on here lately. And today was kind of the big break finally in the equities. I even took a little slice of that off just because 14% of the day is a lot.
And how do you see this unfolding? Like, what are you looking for? What point will you think about covering or adding? What's your game plan?
To me, this trade's not over until they decide, until essentially Erdogan decides like, hey, let's actually raise rates. Like, I was dumb. I was wrong, which I don't see happening because the guy's ego is just unbelievable. And in fact, so I've heard all these stories about him being out in the public and people getting really mad and like talking to him about like how terrible their life is because of the currency crisis, and he just basically tells them, "You're lying. It's not that bad. Like, you're just making that up." Like literally, this is kind of stuff he tells people, his own voters and constituents. Well, constituents is probably a strong word for Turkey, but his subjects. So and until he's gone or he just decides to admit defeat, like I just don't see how this will get much better.
And so you're staying short.
But if they ever had like a governance switch to a competent regime, like I think Turkey could not only would you not want to be short anymore, but it could end up being a great long at some point.
Okay, but till then you're short.
Yeah, indeed. And
do you think? Oh, sorry to interrupt, but do you think this has the potential to cause ripple effects throughout the rest of the market, or even maybe not the rest of the market in the developed markets, but what about other emerging markets?
Yeah, I do, and I think that one of the drivers here is a driver for other emerging markets. So I'm also short South Africa and Pakistan, kind of for similar reasons. And one of those is, the dollar's going up and oil's high and gas is super high. So if the dollar's high and energy's high, if you're in an energy importing emerging market, I mean that's just double pain in a really bad way, especially when you just had to take on a bunch of debt during the pandemic, and when you're an EM, you can't just print it away and no one notices the way you can in the West. Like you do that in a place like Brazil, and all of a sudden you have to go, raising interest rates 1,000 bips at a time, and still you can't get your currency off the ground. So I think high energy, high dollar can keep pressure on all those kind of places I just mentioned. And then if you have Turkey kind of really blow open, then I think you just got to get a lot of sympathy pain and some of those other weaker EMs that have bad balance payments, and maybe you look at like a place like Pakistan, they really depend on LNG imports, which are just costing them just an absolute fortune right now. They don't have the dollars for it.
Is there a good ETF on that? Is that how you do that?
Yeah. So Pakistan is PAK.
Yep.
South Africa, I want to say, is EZA, and then Turkey's TUR. Those are all
and so
there.
You're shorting the equities in all of them.
Yep.
Because you figure as well that they'll have to raise rates, and that'll slow the economy.
Yeah, and I'm off and on short the currencies and all those except Pakistan. I don't think that, as far as I know, it's not a very liquid way to like trade that. But you can trade obviously the rand pretty easily in FX, but
so
even futures, come to think of it.
So keeping on the topic of currencies, I have a confession. We have a client who's one of my friends that's both a client of mine and a client of yours. And the other day he is perpetually, he claims that he is not bearish China, but he deep down inside I know he is. And I have been, let's just say, on the other side of that trade because of mostly the carry. And when you asked what one of the best performing currencies was over the last little while, and you said the Argentine peso, I would have chosen actually China because a lot of people don't realize that the carry is being so great, and especially for one of the more large currencies, it's been by far and away the best. And I've always kind of welcomed all the negativity and the famous hedge fund guys that are talking about how China is going to blow up and all the negativity, and yet the currency just keeps going higher and higher and higher. And not only that, you're earning a huge pickup in yield. It's got the highest real yield out of all the G10 or countries. So the other day, he sent me one of your charts, and it said something about how you were going to get short China. And I said to him, I said, see, I knew there was a reason you always like Chase better. And I admit that actually, for the first time in a while, I am pulling in my China long and pulling in buying CNH. And I'll tell you mine, but I'll let you go first because I suspect that we're doing it for the same reasons.
Yeah, I mean, you think about the divergences that have gone on during this entire bull market for the yuan, and they're kind of all going away. Like their economies is gotten too weak to the point where they got to start stimulating and loosening up, and maybe even cutting actual policy rates, which they don't do very often. And then at the same time, the U.S. is going to be tightening and raising rates, and so all that carry is going to get taken out. And I think they're so weak, especially with the property market situation, that they're going to have to maybe ease and stimulate more than anyone expects at the moment. And I could easily see that, pushing at least back to maybe 6.5, something like that on dollar.
Do you think it's a good risk reward from that side though? Because we're slightly different. For me, I'm just covering mine, and I think that the risk is it. Or let's just put it this way: the long on yuan isn't as attractive anymore. And you still haven't mentioned my reason for it, but I'll wait and see if you do. But do you think that the risk reward about being short is actually attractive enough to put on a position?
Yes, I don't think it's some like portfolio cornerstone position or anything. I think it's kind of a fringe position, but I think it's worth putting on. I'm definitely ready to go on it. Mostly just because just policy going complete opposite directions all of a sudden in both. And China was able to get away with doing nothing for the last year because Western demand pulling on their economy was just so strong. They could just sit back and do nothing and just let U.S. crazy demand do everything for them.
Right. It was the opposite of the great financial crisis, right?
Yeah, exactly.
Okay, so for me, I'll explain to you why I'm no longer want to be long the yuan. It's that the government is now giving you signals that they are uncomfortable with the rise, and at the end of the day, that is we call it a currency and we think it trades, but it really doesn't. It's set.
Yeah, it's definitely very, very managed.
Right. And if it's managed and they are giving you signals that they no longer want to have it rise, because it is one of the strongest currencies out there. And it is strong because of the reasons that you just mentioned, the fact that everyone's buying Chinese goods. And we've had this huge demand for renminbi, and the government is signaled now that they're no longer comfortable with that. And to me, the attractiveness and the risks are that they go the other way on you, that they make it weaker as opposed to stronger.
Yeah, I think so. And my guess is it kind of just leaks, lower for a while. It's not going to be some one-off devaluation like I'm sure some people will get back to saying, but
we'll leave that for other shows, and they'll talk about how it's all going to collapse and how you can buy a fund that is buying out of the money puts and 100% in it.
Yeah, I'll pass on that. Now, if you do it for the lira, maybe I'll get in that. But
well, yeah, all right. Okay. So, what else? Any other trades that interest you? Anything you want to talk about?
Yeah, I'll have one last one, and that's corn. And
that's right. Okay.
So a lot of people are all over this fertilizer issue, but for some reason, not too many people seem to be very bullish on corn. But I think the feed through there is kind of obvious.
So wait, why don't you back up and explain to people the fertilizer issue, and then we'll take the next step from there.
So nitrogen-based fertilizers are essentially just natural gas. It's like 80% of the cost, the feedstock into making them. So if you look all over Europe and Asia right now, where natural gas is incredibly expensive, you either have no production, less production, or very expensive production. So the price of all the not just nitrogen-based fertilizers, but then more so has just skyrocketed. It's essentially at all new all-time highs everywhere in every way, and that is a significant cost to farmers, especially for corn. So corn is a very nitrogen-heavy in its needs, versus something like soy is it needs a good bit less nitrogen. It needs more like phosphate and potassium. So you get into a situation where if you're a farmer, you have to pay an absurd amount of money to get nitrogen and nitrogen fertilizer. So in my opinion, you either get a decent amount of switching over to soy or wheat or something else for the next planting season, or you just get less fertilizer applied to maybe a lot of acres, and in that situation you get lower yields. So whether it's less acres or just pure lower yields or some combination of both, I just think the next year's crop will be disappointingly low based on the prices, and I just think that can force corn prices for next year. I think a good bit higher. Maybe nothing crazy, because talking to some farmers, they just like planting corn, they like growing it, and they're probably still going to plant a lot. But I think yields can disappoint, and I think corn prices can go a good bit higher.
The one thing about farmers is that they've experienced such tough times, and it's always such a difficult business, and they're wonderful people, but they're always so bearish on their crops because they've been disappointed so often.
Yeah, and if you think about it, the shortage extends to farm equipment. Even parts for farm equipment has gotten kind of out of hand and very expensive and in short supply. Labor's obviously a problem for farmers right now. So all these supply issues we see throughout the economy are very much problems for farmers. So their costs are going up regardless. So the last thing they need is for kind of their biggest pivot input to be going really, really high. And for the last 5-10 years, fertilizer prices have been really low. So this is definitely going to sting.
And so are you playing that? You mentioned futures. Is there anything else, or are you just keep it pure and just own the futures?
Yeah, for me, I'm just in the futures. December 22. But for people that don't trade futures, the corn ETF, which is literally just corn, is the symbol. It's actually decent. It's holding stuff, a lot of stuff late next year, so it would capture that crop reasonably well. So there's not like a lot of roll risk the way there is in a lot of commodity ETFs.
I'll augment your call a little bit with I don't know if you're familiar with Jason's work at Sentiment Trader.
Mm-hmm.
I recently just signed up, and I was like going through, and I noticed that he talked about the Santa Claus corn rally, and he showed the. I didn't know it was either, and he showed the reliability of the Santa Claus corn rally, and I was holy smokes, this is outstanding. So if you're interested, go check out his product. It's really great. I'm long the corn for the Santa Claus corn rally, not just long stocks, also long corn, because it's actually it's almost more reliable than stocks.
That's very interesting.
And it's one of these things that nobody knows about, or not nobody. I'm sure the corn traders all know about it, and they're probably like, Kev, stop talking about it. All right. So, Chase, for those who don't know, you actually have a little bit of a southern drawl that's very comes out every now and then. And the lemon line might have given something out away there. But you've recently moved. You're no longer in the hot weather, and you've joined us here on the East Coast. Why don't you tell us a little bit about that and how you're enjoying things over here?
Yeah, so I grew up in Texas, but spent the last decade in California. Some of that northern, way too much of it was in Southern California, the desert, which I was not a fan of. Northern California was amazing, but yeah, I just moved to Northern Virginia in the DC area. We like the area. I did not miss humidity growing up in Texas, and there's some of that here, which I don't love. But so far, we haven't had a winter, which is killing my nat gas trades. But it's kind of nice to go outside in. But I'll be heading back west. I'm gonna move back out to Washington State here in probably a year or two. So.
Oh, you are. I didn't realize
West
that.
Coast guy at heart.
Oh, you like that time zone better.
This big time. I like the time zone better. There's nothing worse than sports ending at like 1 a.m. all the time.
Oh, because you're watching the games out there. I get it.
Oh, so my college was playing a basketball game recently. It started at 10 p.m. This is brutal.
Well, I kind of view it the other way when you're in Vancouver and you're there and you're watching hockey start on Saturday night, because we watch it on Saturday nights, and it's starting at 4, and you're like, what the hell? Why is hockey going? Like, and you realize that it starts at 4. And then there our late game, which starts here at 10, there starts at 7. Makes sense when you think about it, but it just seems wrong to be playing hockey at Saturday at 4. But I'm sure the people on the West Coast will be like, that's how the way it is, Kev. You're the one that's got it wrong.
Yeah, the 6:30 market opens. It is a little tough out west. I will say that, but sports ending before midnight's kind of nice.
How about the guys at PIMCO and the bond guys that they have to get up earlier than it's not 9:30 open. It's 8, which is 5, and then not only that, you should be at your desk earlier than when the market opens. So what was Bill Gross and the boys? Were they showing up at 4 or 3 in the morning?
Yeah, I mean, it's like working at like Good Morning America or something. Like what time they have to show up. It's got to be brutal.
It's got to be. You're absolutely right. So last time you were telling us about your daughter. How is she, and how old is she now?
So Christmas Eve she'll be a year and a half, and she's growing fast. She's very, very tall. She's doing great. She's running around. She doesn't walk. She just runs and talking more and more. It's been a lot of fun.
Are you enjoying being a dad?
Yeah, definitely, big time.
And what was the biggest surprise for you?
Oh man, biggest surprise. The biggest thing that I didn't understand, because I haven't been around babies a bunch in my life, was how much there's not going on with a baby their first couple of months. They basically just sleep and eat, and that's about it. Like, I didn't realize how little goes on for a newborn.
No,
sometimes you miss those days whenever they're a toddler.
Yeah, that's right. I always kind of joke and say, when everyone's all keen on them walking or crawling, and they're so excited about it, I'm like, oh no, you should enjoy it while they don't. They're still so stable. Listen, I'm going to do something, Chase. We didn't talk about it, but I'm hoping that you'll be able to adapt. You're a quick-witted fellow. I'm sure you'll be fine. I'm going to give you the questions that I always ask everyone. Let's start. You might have already answered them before, so you can.
I haven't actually.
You haven't? Okay, well, great. So let's do it. So let's start with your favorite investment book.
Oh man, so for me, I'm one of those people that doesn't like investment books as much as a lot of other books. So for investment book, though, I will say it's the Tao of Capital, which is a very kind of like Austrian-based by Mark Spitznagel, the guy that runs the tail risk fund with the gentleman Nassim Taleb. There's just a lot of good metaphors in that book that I found really helpful. In fact, the name Pinecone comes from a story he kind of tells in that book.
Okay.
But also like a lot of books are kind of about thinking. And I'll give you a couple of those. One's Mastermind, and one is called The Scout Mindset.
The Scout Mindset?
Yeah.
What's that about? Like, is it what it sounds like it's about?
Yeah, it kind of is. Like, so first of all, like Mastermind kind of goes into why can't I think of it? Sherlock Holmes and like kind of picks apart the way he would think about problems and why he has kind of a unique mindset and way of seeing the world, which I found kind of very just unique and helpful.
Okay.
And as far as the Scout Mindset, it's a lot of like wargaming your own thinking is a way that I could say kind of comes through and kind of helps you. It literally just helps you see things like more clearly and kind of some tools for doing that.
Those are two great like another off the beaten track kind of recommendations.
I like books about frameworks and things like that for thinking differently, more so than investment books.
Okay, so let's go on to the next question. And this one is Byron Wien, which is the famous strategist from Morgan Stanley, I believe. He, at the end of every year, would create what he calls his top 10 surprises for next year. He would define a surprise as something the market is just assigning a less than 1/3 chance of occurring, but he believed would have a greater than 50-50 chance of occurring. Do you think you could come up with one Byron Wien type surprise for 2022?
Yeah, so I'll go back to EM. I would say like a major issue in emerging markets, and I'll go back to those three that I mentioned. I could see it just kind of a nasty crisis in places like South Africa, Turkey, Pakistan that aren't really priced in at all.
Oh, I would agree. Very few people are talking or worrying about anything on EM. In fact, it's been forever since we've had any sorts of headlines about that, apart from Turkey. Even Turkey, let's think about it. This is a huge move, and yet we almost don't mention it.
Exactly. It was barely. I saw like a couple tweets about it. Like no one really cares.
Yeah. Okay. Great traders or investors, you pick. Are they born or made?
This one. I'm just another cop out, but to me, it's genuinely it's both. So, our risk management is essentially what makes a good trader. And that has to be like, it's something that I think you can be taught, but at the same time, like the stick-to-itiveness that's required to all the pain you have to take and stick with trading, all the lessons you have to learn the hard way. I think that is something you probably are kind of born with. I think that resiliency, you have to be born with a lot of resiliency and then significant humility. Some people just can't find them in themselves to be humble enough to be a good trader. So I don't think you can teach humility, but I think you can teach like risk management. And at the end of the day, that's really what trading is.
That's a great line, Chase. Some people can't find it in themselves to be humble enough to be a great trader.
It's true.
It's so true, and it's so awesome. Okay, last question for you. A young person that's interested in getting into the business, the finance business, or the investment business, you pick whatever you like. What advice would you give them?
It would all just like really, to me, it's like it's finding your own path. Like, I think everyone has a kind of an idea of what they want to do, and then they have an idea of the job that they're supposed to get or need to get. And I think chasing what you really enjoy is what's most important. So I haven't worked, in the finance industry, kind of done my own thing, but what I've noticed in finance is the amount of turnover. So anytime you guys like interview somebody that's had a 20+ year career, and they've probably worked at like 9 different, institutions or something.
Yeah.
So people are very much chasing the next job and getting the next promotion in finance. And I think some people are made to just kind of do one thing, like maybe like you're a currency research person and you love doing that, but you just keep chasing the next job. Whereas you may have been really good at and really happy with being a currency research person, for that whole 20, 25 years. So finding the thing that you really like to do, getting that job, and then not feeling the pressure to just, keep chasing the next promotion, but just find the thing that, really makes you like really get your juices flowing and just stick with it.
That's terrific. And I think we found the thing that really gets your juices flowing. It's the writing your terrific letter. Why don't you tell people where they can find you and your product?
Yeah, you can find, so on Twitter at Pinecone Macro, and then the website is pineconemacro.com. My wife just completely rebuilt the website. It used to look like an early 90s, like MySpace page. It was terrible. And thankfully, my wife completely rebuilt it. So now it actually looks kind of professional. But yeah, you can find everything there. You can sign up for anything. You can ask for samples there. Everything you need is right on the website.
So not only is she a mother to the 1.5-year-old, she's actually taking time to build your website.
Absolutely.
She deserves many, many kudos.
Absolutely. I don't know what I would do without her. That's for sure.
Okay, so folks, make sure you go check it out. Ask for some samples and give Chase his product a look-see, because it's a terrific product. He's a terrific guy. Chase, it's always a pleasure to have you on the show. I'm wishing all the best in 2022 to you and your family, and have a Merry Christmas.
Same to you, Kevin. Appreciate it.
All right, Patrick, it's time for talking charts. You're going to get out your full box of crayons.
Yeah, let's get
By the
started.
way, are you getting new crayons for your Christmas?
It's not.
Santa's
I don't
gonna
know.
bring you some new ones?
I have no idea. We'll find out.
He's been naughty, so he's not getting no crayons.
He's got to write it. He's got to do it all with coal.
Yeah, I like those thicker black lines. It's fine. All right, let's let's get to the top 3 things we were talking about last week. We were asking whether the S&P was going to muster up new highs, and well, it did a perfect double top test of its high, and just couldn't follow through, could it?
Why was it perfect?
Well, it was almost perfect to this price level, like not perfect as in like you can see like it went for
there we go.
A full retest of that.
It's almost like technical analysis works.
Well, when everyone knows what the previous high was, you don't need to be a technician to sell into it. Anyway, but we did not see that higher high, but the gamma pin prevailed, right, which is actually a part of number 2, which was the OPEX, which is we ended up having a range-bound market that bounced between those 2 very heavy open strikes of 4,600 and 4,700. But the question now, I guess, is will next week create some volatility, some pre-holiday volatility? We'll see. But number 1, we were talking about with those central banks, and well, we definitely did get some market moves there, right, Kev?
For sure. And it did cause a little bit of consternation in the markets in terms of interpreting all the different banks out there. And we got a surprise hike out of England. The unreliable boyfriend. He's back.
Well, you know what? It was interesting. There were certainly a number of markets that came to life in the post FOMC. So we'll get to those charts here in just a moment. But let's talk about the top 3 things. Not that we're just watching for next week, but also over the holidays, as the next top 3 will be in the new year. And so one of the things that I thought we have to watch is, kids are off school and everyone starts taking the holidays. Usually this holiday period is a 2-week vacation period. So arguably many are starting their vacations next week. And the volumes should start to die off over the next couple of weeks. And the bigger question, just very similar to what happened on that Black Friday, does low volume lead to higher volatility, or will it just be a nice, quiet holiday week? Do you have a bet on that one?
I don't know, Patrick.
We don't know. We obviously
of course
don't
I don't know.
know.
If I had to guess, I guess it's going to be a little more sketchy than you might otherwise be the case. There might be some more fireworks.
You know, and in the back of my mind, I have to agree with you. Thinking about like the where the markets are at, and the key things that are likely to transition, and it's very likely that these low volume markets can be whipped around much easier if someone starts to reposition in the markets. I think that it won't be quiet,
and we have that December 2018 week right in front of Christmas, where that was one of the worst weeks around, and that's in a lot of people's mind. And I'm not calling for a repeat of that, but just even the fact that that occurred makes people scared of it. Also means that maybe people are positioned for it. Could mean that the exact opposite happens. We have a rally that catches people off guard. I'm not sure, but I do believe that there's more uncertainty in the market than would generally be the case in this sort of holiday weekend, that the possibility for some volatility is way higher.
Absolutely. So number two, I wanted to talk about sector rotation. Now, I want to look at it two ways. First of all, let's go look at the traditional U.S. sectors. And one of the interesting things that's been going on in the last month, right? The S&P 500 is not far off from its 52-week high. Like we always talk about the FANGs being a big factor of driving the index. But it's really interesting that the sectors that have outperformed in the last month are utilities, REITs, consumer staple stocks, and healthcare that have all run. And you look at the worst performing 1 month performance: energy, consumer cyclicals, industrials, financials, right? And that has been quite a rotation from what was working for a good part of the back half of this year. And the question is this a new sustained trend, like these bond proxies and more defensive low beta names all outperforming, or was this just like a 1 month kind of a little hiccup and then a lot more of the normal? Do you have a view on that?
I think this is most portfolio managers, hedge funds, those sorts of professional money managers getting closer to shore. And that's what this is. It was a don't mess up my year. I'm just don't want to make any mistakes. I'm gonna buy some defensives. I'm gonna sell these ones that were up, and I'm gonna make sure I don't make any mistakes.
So one of the other parts of this was on your theme. You were talking about tax loss selling, and one of the things that you've shared in the past is this idea that some of these tax loss selling sectors might rebound, but more importantly, that some of these beloved FANGs might meet some selling in the new year.
Yes.
So the bigger question here, will we see a bit of rotation? Is that potentially going to be the top in Apple? Not necessarily implying that has to have a big crash, but simply its relative outperformance that has been driving stops. And that is certainly something to watch into the new year, right?
I think it's a great point, Patrick. I do believe that it's for sure, not for sure. It's likely to happen in the actual new year. I think that a lot of these investment managers will come in and say, oh, I'm overweight these. I can go take some chance. It's a new year. I can try some new names. I can go into different parts of the economy / market. The real question to me is, does it even start before the end of the year? Do we see this occur this week, maybe, or the last week?
What do you mean? It looks like Apple's been doing it all week already.
The whole market's been having trouble. Can you give me a relative, like? Well, I would say that there's been some interesting things like Philip Morris, BMY. There's some stocks that are starting to behave much better, that are unusual to be doing well, to be leading the pack.
So BMI or
why Bristol Myers?
Oh yeah. Well, yeah, no, but that's the healthcare. So there's a lot of.
I'm agreeing with you, and I'm saying that we're seeing seen some shifts that are not typical stocks that you would expect to be doing well at this point.
Yeah, but I think my bigger question, which we both agree on this. My bigger question is this rotation continue? Like these prevailing trends, the fact that these money managers went to these defensives to kind of lock up their year, I guess you can say, will that still be the trend in January?
Well, so I'll take a little bit of a more nuanced view. I don't think that they'll rush into the FANGs like we've seen over the last little while. I think they'll sell those, but they're not going to buy quite as defensive as they've been buying for the last month.
Yeah.
So instead of buying the healthcare, I think they might be buying banks. So it'll be more about. And I saw you mentioned the industrials were for sale this year. This in energy, I suspect that you'll find a return to real economy stocks more.
Right. And so the one.
Oh, wait 1 second. I didn't want to take that back, Patrick. I'm sorry to walk it back. Well, the one thing we didn't discuss is how much of the defensive move might have been worries about Omicron. And I don't think you can dismiss it. We discussed it briefly with Chase. I'd love to hear your view, because if you are worried about the economy and you are worried about that and you didn't want to rush back into Peloton and all those things, what would you do? You would go buy those names.
And you know what? The one thing that I think that can transpire is that the fears associated with this particular strain of COVID, I think will be just as short-lived, if not shorter than that 1 month crash back in March of 2020. Even though it won't necessarily result in a crash, I'm just saying that the sentiment and the fear of everyone about it, I think will be very short-lived. I wouldn't be surprised if by mid-January no one's talking about it anymore.
Well, that'd be a great thing. I hope you're right, buddy. Hope you're right.
You know what? I just think that we've seen these cycles now so many times, this hammer and dance stuff. And the thing is that once everyone let a couple weeks pass and all the holidays are over and all of this kind of big crowd gathering stuff is behind us, suddenly everyone's going to say this wasn't so bad, and it won't dominate the headlines the same way. Anyway.
1 second, I'll just like to tell you that echoes very much one of our most popular guests that we've ever had on the show, Jimmy Jude. Jimmy Jude brought up about a month ago, he said something to the effect that if you remember back after the horrible tragedy of 9/11, in the ensuing years that followed, we had periods where every single headline where a plane went off course or didn't talk to the tower, or there was a suspicious package, the market would get hammered. And it would get hammered rightfully, because the reality was that everyone was worried about the possibility of terrorism. And eventually what happened was that the market became less and less concerned each and every time.
Right.
And I suspect that his point was that this is what will happen with the COVID, that yes, there will still be things, there will be developments, there will be problems, but the market is increasingly able to handle it. And I do agree from that. It is very similar to kind of your argument as well.
And more importantly,
reaction times have been shortened.
And the more importantly, the one thing I've learned, and I think you share the same sentiment, is that the market will never crash for the same reason twice. You can't catch the market on the same story twice. Like it got them once in March 2000, all of us in March 2020. But the likelihood that this becomes the catalyst, I'm a seller on that idea.
Yeah, and in fact, you might even argue that the lesson that's being taught to the market is that if it's really bad, the feds and the governments are going to print, and you should buy it.
Yeah. Actually,
okay, so what's the number one thing we should be watching next couple of weeks?
Is the gold bottom in?
Oh, you had to do it, didn't you?
Listen,
you goochered it. You didn't check.
I didn't goocher. No, I didn't goocher because I never said it isn't.
I know, but it's kind of implied. You can't.
No, it's not implied.
If you had said,
"Will we do my balls?"
1 second. If you had said 1 second, Patrick. If you had said, "Will we go to new lows in gold?" Then I would be more excited about it.
Because
that was
let me paraphrase.
Will
we see new lows in gold, Kevin?
Doesn't work now, buddy.
You're saying the market gods have seen right through me.
That's right. It's the market gods, they know everything. When I used to trade on the desk, and we had a big position that was going against us, we would try to give the market gods a little taste. we'd be like, okay, you're long, whatever. Let's just say you're long 1 million of the ETF. You'd be like, I'll sell 100. And you'd be like, okay, that was it. That'll make the low. That'll make the low. It never made the low. It wasn't until we sold the last 100 and the gods knew that we were flat that then it would rally.
All right. Well, listen, let's talk some technicals on gold to share my much more neutral stance than your bullish tilt. All right. So what I wanted to highlight, there's a couple levels that are pretty important in my mind. When we're around this 1800 level where we're currently trading, is that psychological round number of 1800 that everyone's been watching. But I actually think that the real key levels are closer to where we were looking for the original breakout around 1835. And there's a number of retracement zones and a number of places where in this window, if gold actually fails to follow through, then it is actually a candidate for a false breakout. And so my whole idea here is obviously we're going to be next time we're going to talk some charts like this will be several weeks from now. I'm going to be watching whether gold can do some bullish constructive price action to set up to break through these levels. Because if we see that within a week or two gold is trading back down towards 1750 and this was all just a false start, then there's nothing to talk about here. And I think there's a lot of work. While it's possible that reversal on the FOMC was meaningful, one day doesn't make a new trend, and we need to see some more price action construction before I start getting overly excited about this.
That's a very fancy way of saying you're worried that's a prairie dog.
Yes. Very noble animal.
It is a noble animal.
Merry Christmas to the prairie dogs. All right. Let's talk some charts. Let's start with that S&P 500, and I won't lie that I was far more bullish in the post FOMC than I probably should have been. That reversal happened pretty much at a key level and was heading to those highs, and it really felt like they were going to give it a shot to 52-week highs, and just. It faded right off there. And I'm not so sure that I want to already be calling that this is some sort of a major top. I think it's very, very premature. We're still above all the key moving averages, still making arguably higher lows along the way. So the price action is still in favor of the bulls, but certainly a disappointing little turn here to end the week. And it'll be really important for the bulls to come and rebound this back to 4,700 early next week to keep that trend going.
I couldn't agree more in terms of the disappointment, Patrick, and that's probably why it occurred. I didn't realize you were quite as bullish as you were.
Did I goocher it for you? Or you goochered it for
both
me?
Bullish. It doesn't matter. The gods know. Even if we pretend that neither one of us are bullish, they know.
You know what bothered me about my bullishness on the S&P was actually the sluggishness of the NASDAQ.
That doesn't bother me because I think we're going to get a rotation and the S&P can go off without the NASDAQ.
Okay, you could make that argument, but like my view though was that we should have seen S&P could have relatively outperformed, but in my mind, the NASDAQ held up very well throughout the November sell-off, and it never mustered up any shot at retesting its highs. And we're trading on the NASDAQ right now at 2 months lows. Right? Like you have to go all the way back to like October to see price action or the kind of levels where the NASDAQ is trading.
The thing's up on a stick. I that doesn't bother me as much because, as I say, I expect those 6 stocks to get hammered or 8 stocks on the NASDAQ 100. It's the small cap. Oh, there you go. You're already reading my mind. Yeah. This is the disappointment.
Oh, talk about a complete false start.
Oh, that's the ultimate prairie dog. It's a little bit longer term prairie dog, but it was really a prairie dog because we had a whole year of it going
sideways and a breakout out of an extended consolidation like that.
Just
often
just
is
in
the
time
beginning
to get
of some
us all
sort
long,
of.
And then just.
But
boom.
I mean, do you think the Omicron was it could have been just the thing that kind of like it was vulnerable because it was so unloved. And so when the bull started, everyone started getting excited, and then the wind was just taken out of the sails with this like it's those middle America small cap stocks that always are the ones that get hit by shutdowns or other repeat things. You think that this is just a buying opportunity? Like if we're right about the fact that this COVID little outbreak that we're having now is not going to be remotely as bad as everyone is worried about, is that make small caps here a great buy?
So I just want to be clear when I say that COVID isn't as bad as everyone's worried about. We have to distinguish between the case numbers, the kind of the human portion of it, and what markets are expecting.
I'd say markets are expecting.
So obviously we don't want to be dismissing it or making people feel that they shouldn't, from a human perspective, respect it and be careful. But at the same time, I agree with you, Patrick. From a basis of what the market's priced in, to me, it felt like this is why Thursday and Friday was so bad. It really did. Like there's lots of bad news. Market was trading heavy. And I thought coming out of the FOMC, I was with you. I thought we were going to off to the races. And it's for sale. The one thing I would say is that the average stock we might be close to the highs on the indexes, but the average stock is a long way from the highs, and we've had a correction. This was a correction. There's no doubt about it. If you look at what most people's portfolios, if you weren't stuck in a market cap weight index and you were actually choosing stocks, this was a correction.
Yeah.
And here, let's just measure out. Can you measure out the bottom to top on that IWM there? Or?
Yeah, well, like the correction was what 14% over the span of 45 days. Yeah.
Right. So.
That's a correction. That's it's not 20%, but it's that's the typical type of equity.
Well, is it
correction.
20% a bear market?
Well, yeah. I never drink that Kool-Aid. But
I'm with you. That Kool-Aid they don't spike that enough for us. But there's no doubt about it. That was an ugly thing. And I Patrick, whether we bought him this week or it's the week after Christmas, or even maybe the New Year, it's coming somewhere here, and it feels so washed out. It feels like everyone hates all these names. I think we get a ripper on the upside, and obviously you could tell that from my stupid bet on the S&P from last week. I was leaning long, and it just didn't work.
All right, well let's talk to dollar.
Of course.
I didn't put it in the top 3. I should have. Look at that screaming green candle. But this strength in the dollar obviously came on another break in the euro, and it really comes down to just how weak the euro has been, and typically after such an oversold state. You would think that the euro could have mustered up a print up to 114, 115 on a reaction, and it's spent a month struggling to stay above 113. And it rolled right over. We're right along those lows. It's just such a weak chart. Is there another leg going down to 110 on the Euro USD? It sure feels like it.
So, Patrick, I'll tell you the scariest development for the Euro bears out there. I'm no longer sure that it's not headed lower. I'm no longer sure that it's going to bounce. Like, I'm getting more nervous about the possibility it's headed lower. And when I start to, even me, who's generally one to dismiss Euro weakness and say, it's not that big a deal, it feels terrible.
Yeah.
They keep doing all the wrong things, Patrick. But the one pushback I'm going to tell you about when you pull up your dollar index, everyone stares at that DXY. It's got a whole bunch of euro, and it's got a whole bunch of yen. Two dysfunctional currencies. Call them currencies.
Yeah, and you got to throw in the pound.
Well,
Like-
at least the pound has got it's moving. There's a. I actually don't mind the pound as much, but interestingly enough, I pulled up.
I think the three of those make up what, like 70+% of
right.
the.
I pulled up the
basket.
trade weighted U.S. dollar index the other day, or actually might have been today, and it wasn't anywhere near as bullish looking. And I increasingly believe that you should be looking at that chart as opposed to the DXY.
Okay. Well, you know what? Look at this chart on the pound sterling. It looks like shit. Look at this chart on the CAD. Looks like shit. You look at this chart on the Aussie. Looks like shit. Don't give me this. Every chart on this looks like crap versus the U.S. dollar. So I'm not drinking your Kool-Aid. What, are you going to go and buy yourself an emerging market currency basket? Because no, I'm a seller on your idea.
So you love the U.S. dollar no matter what.
Well, no, I'm just
You're
saying.
like, you know what? We should make
look
a
how
fourth
no, but
Austin Powers. 1 second. We should make a fourth Austin Powers. We had gold, remember? We should have like U.S. dollar daddy, and that's Patrick. I love U.S. dollars. I love US dollars.
Don't make me drink no milkshakes here, buddy.
That's right. You and Brent can get together and have the
when the dollar looks like it has a shit chart, I'll call it a shit. This is not the time. Your little trade weighted thing doesn't.
Okay,
weigh
so
anything.
here, let's go. Put are we going to have a bet this week?
Yeah. Well, no, but we could.
Wait, let's do it. Let's
All right. Okay. Let's talk. Okay. Let's save it.
Let's stop talking about the dollar and let's have a bet for like a month or something, or
Sounds
we'll
good.
figure out
Yeah,
how
for
long
the
we're
year.
going to be away, and we'll do a longer term bet.
There you go. The asset that shall not be named still looks just as weak. It's every rally is failing almost immediately. It has not broken that little crash low it had, but no sign of buyers buying the dip here either. It really, and this is the bigger question. Like it really feels that all these kind of risk-on assets, particularly in this kind of space, whether in the currencies and even in a lot of the commodities, nothing seems to be moving. It's like everyone's digging for U.S. dollars as safe haven.
That's right, Patrick. I have an admission to you.
Uh-oh.
I cheated on you this week,
Oh no.
and I went on Jack Farley, who used to be at another place, and he's gone off on his own. And I had just finished writing my piece about shorting the asset that shall be not named, and he proceeded to quiz me about that forever. So I'm scared to open my Twitter.
Yeah, don't.
They're gonna hate me. The coiners are gonna be so mad at me. And for anyone that's a coiner that's mad at me, I want to say, go to Meet You in the Machine. There's a meet me in the machine. What is it? Meet you in the machine. No, I think it's meet you in the machine. And remember, for me, it's just a trade. It is not a religion. It is not anything like that. Yeah, meet you in the machine. Meet you in the machine.
All right.
Just
I'm
a
going to
trade.
stay out of it so that my Twitter account stays
you're
safe.
better. You're smarter.
All right,
You
so-
don't do stupid things like me.
So
But it does look. The chart looks terrible, though. Do you agree?
yeah, well, it does. It does.
Yeah.
There is no sign of buyers at all.
And the other thing is, I will say, and I highlighted this in my piece, even the Bitcoiners, they will admit that the volatility is insane. It's had since 2010 80% declines. 3.
Yeah.
So they view this as volatility is a feature, not a bug.
There you go.
And so there you go. I think we're gonna have one of that. We're gonna have a fourth.
Let's talk crude oil. I got
Okay.
the Feb contract up here, and one of the interesting things to me, like, okay, we last week we were talking about it. That's a short, probably even an intermediate bottom that's developed, and I don't think my view on that has overall changed, but so far, the entire snapback rally in crude oil has more or less stalled out at it's about a 50% retrace of the decline, which is just a typical bounce. And it's struggling to follow through on it. And that doesn't make me bearish crude, but it does increase the likelihood that some sort of a retest of its lows, something going down into the mid 60s again to kind of establish a base from which something more bullish can happen is increasing. Like maybe over the holidays we have a dip of $2, $3, $4, $5 more to the downside to kind of retest those lows. One way or another, I do still have the bigger bullish tilt and think it would be a buy on dip, but it just feels like oil may take a break over the holidays still.
I like your bearishness or your skepticism.
Really? You think it's just straight up?
No, I don't know. I have trouble with the front months. I think you should own the longer dated stuff, and it's grinding higher, it's looking really good. Like pull up December 2023 or 24 or 25. So it's a better looking chart.
So
can you do that?
Where do you want me to go?
23s. Let's do 23s. December.
But where? December's?
Yeah.
I don't know about that being that.
Well, actually, today was pretty ugly. I didn't dial today. I hadn't looked at today's quote. It was hanging in there as a pretty ugly red candle.
You were just cherry picking, hoping that it randomly was good.
It was right. No, but if you think about it, take out today's action and think about what that chart looked like. It looked a lot better.
Okay, but it did only go from 55 to 67 in the bull run, so it never really participated on the upside.
But it had a big, huge move down, and then it moved back up, and it was consolidated.
You're right. The damage was in the front of the curve. There is no dispute about that, and it probably is a good idea to own the farther contracts. Live in
well, it depends on what your view is and why you're doing it.
Yeah. Well, you have to also think that many of the commodity stories have a longer time horizon, right? A lot of people mix up the short-term liquidity of these market swings higher and lower versus that long-term fundamental story.
That's a great point. And if you're trading the long-term fundamental story, trade the appropriate size, volatility, and contract to take advantage of that. One of the things I'll say, Patrick, is let's just imagine that our hope that the Omicron is mild, rips through, and then that's it for the virus. Let's just imagine, let's take the best case scenario about this Omicron. Okay. That it's super mild, that everybody gets it, and it ends up being like a natural immunizer. Well, what price would you pay for oil on the other side of that? What would you assume the economy looks like if we have a situation?
Yeah, but I wouldn't say that I wouldn't said that that's not much different than it was before the Omicron came around, right? Which is that the conditions were generally bullish, right?
Really? Because I would view that as more assured that we finally gotten through this.
Look, you always had that call that oil was going to 100. I'll drink your Kool-Aid. I think that oil.
Oh yeah, I'm not going to be right, am I?
Not on this year, but the thing is, but
it would be a hell of a last year rally.
Yeah, but generally though, I think that the price of oil is heading there. And so if the price of oil is heading there, it's just a matter of time. And you might be right that it's the catalyst, but I think that just everyone has to kind of ask themselves, like, what time frame are they trading, right? Because all of this will be an opportunity if you have a long enough time frame. Let's talk uranium, though.
Oh,
well, at least the Sprott Physical Uranium Trust. It's amazing that it's like that one bull run where it went up like 80%, happened like literally in 2 weeks. And ever since then, it's just been so quiet. And I don't think I want to make a too strong of a bullish or bearish call, other than just observing the fact that that little run ended so fast. And it's just amazing how long it's just been stuck in the mud.
First of all, anytime they put laser eyes on their avatars, run.
Yeah,
I don't know how many times this has got to play out.
It's got to wash out the laser eyes. Right?
Yeah, we've washed out a fair bit of them. I worry there's still a lot of longs. This trade, I'm confident it'll work over the longer term, but you need to be aware that there is a large contingent of fast money that trades this. And it ends up being more of a bet about what the fast money is going to do than what the commodity will do.
Yeah.
And so one of the points back to your argument about that you need to position appropriately and take the right and ask yourself what time frame you're trading. If you're trading this from a long time horizon, who cares? You put your bet and you're going to wake up a year from now and it's either going to be double or it's going to maybe be a little bit lower. It probably from a longer term fundamental view, it's a great bet.
Right.
And that's what you should get. We should remind everyone, be careful assuming everything is going to go play out so quickly and everything's going to work. We had a situation with after COVID, it seemed to be that trading was super easy. It all went so fast. And if you didn't make money that week, you were wondering what was wrong with your thesis. Well, that's not usually how markets work.
Right. So I want to leave the talking charts segment just touching on corporate credit spreads on junk. And what was interesting is we had that spike finally after hovering around 3% very quietly for most of the third and fourth quarters. Finally got a little bit of a spike, something that really brought it back to life. When looking at something like the HYG, some legit breakdowns in corporate junk bonds. And so the question here, was this just a little buy on dip, or do you think that these junk bonds are going to start running into a little more trouble? I guess that's a real call on what's happening in the bonds in that 2 to 5 year duration, right? Which is those treasuries that have been the most impacted about this tightening cycle, right? Do you think that this is just an overdone thing in the junk bonds?
Well, there was two things caused the JNK to go down. One was, as you mentioned, a rise in short-term yields, and 2 to 5 is the worst part of the sector because the market is busy pricing in more and more Fed hikes. And then the second thing, back to the previous chart, is that credit spreads actually did widen, and that is what we're always concerned about, is that they've widened. I was laughing because the other day you sent me a note. You said, you're going to really like the interview on that other podcast that you cheat on. And now I realize why you were so excited about it. I forgot that Julian Brigden was a great interview. I don't mind. I actually listened. It was terrific. I really like Julian. His thinking is really top notch. He's a great speaker. He presents his arguments very well. And he was very bearish junk, right?
Yeah.
And I thought,
but he had it paired with some other bond trades, though. It wasn't just an outright, right?
But that's Patrick's. You love that. Someone says sell junk, and you're like,
I do have a soft spot for
you
that.
You do.
Yeah.
If I was like a derivative salesman and you were my institutional client, I'd be selling you structured products, making you overpay for vol to be short junk because you just fall for it each and every time.
All right, bud. That's enough for talking charts. Let's go on.
All right, Patrick, this week in trading history, what do you have planned for us?
Well, this week we're going to go back to December 14th of 1825. The world's largest speculative commodity bubble pops. And so let's do a little bit of story about what happened and how it led up to it. So Spain lost control of its South American interests, and several independent nations emerged out of it, including Chile, Colombia, Argentina, Peru, Mexico, and Guatemala. These fledgling nations were eager to develop infrastructure as well as exploit their mineral resources and their needs to create a huge demand for funds and technical expertise from the financial centers of Europe, particularly in London, which now at that time has replaced Amsterdam as the financial capital of Europe. So the sovereign bonds issued by these emerging nations, despite the nations lacking the ability to tax or having the tax infrastructure needed to repay the debt, were all the rage in the early 1820s. And some of the English mining firms entered the fray as well, in forming joint stock companies devoted to developing South American mineral interest. As an example, the share price of one such company as Anglo-Mexican rose from 33 pounds to 158 pounds in a single month, and shares of Real de Monte, a Mexican silver miner, rose from 70 pounds to 1,350 pounds. As happens in these kind of bubbles, lax underwriting, poor information, and general speculative fever invite fraud. And the best example of the fraud of that era was the story of Gregor MacGregor, a Scottish adventurer who had fought for the Venezuela in the War of Independence against Spain. Upon his return to England, MacGregor toured the wealthiest drawing rooms of London, touting the vast resources, civil service, and army of an entirely fictional Central American principality of Poyas. So they literally made a country up, or like a principality. So convincing was MacGregor that he was able to float a large bond issue on the London Stock Exchange in 1822 for a country that didn't exist.
Nice.
Right? Like that.
You know, I call someone else the world's greatest stock promoter.
Yeah.
But maybe I'm wrong.
Well,
this guy sounds pretty epic.
per generation. You have to make it generational. This guy was pretty good for his time, right? So let's talk about the misstep and what ended up happening. So the London stock and bond market crashed in April 1825 and brought on the panic. Whatever the precise trigger of the crash was uncertain, but it caused commercial failures and a drop of collateral values that slowed activity over the ensuing months. By summer of that year, the price of Latin American bonds have basically been halved. Banks were highly exposed to such debt, so their nervous depositors began to withdraw. And as the money and credit supply contracted, bankruptcies and unemployment soared while production slumped. The crisis was aggravated by Bank of England's initial failure to act as lender of last resort to ensure that it would not have to suspend convertibility or risk profits. The bank actually raised the discount rate in December 1825 in the midst of a bank run. Like they raised rates.
That's the biggest FU out there.
No shit, right?
Yeah.
And so on December 14th in 1825, London Bank, Pole & Co. would fail, causing bank runs and immediately bringing down 40 other commercial banks.
Just think, though, Patrick, just think how excited the Peter Schiffs and the other hard money guys must have been excited. You know, how much that must have got them all riled up.
Yeah.
They must have loved it. You know,
wait till you see how the story ends. Hold on.
Okay.
In that panic of 1825, stocks would fall 80%. Troops would be called in to control riots, and even the Bank of England would nearly fail. But the Bank of England had a savior in 1825. By Christmas Eve of 1825, the risk of failure of the Bank of England would be over. Due to a gold deposit of more than 300,000 coins from Nathan Rothschild.
Oh.
And so the bank would be saved. The economic crisis would, though, continue on for another year. But see, like it takes gold coins, 300,000 deposited in the, and that's hard money.
Do you know what?
Crisis averted.
Listen. If Peter Schiff is lucky enough to have the Fed do the responsible thing and raise rates to 10% and cause a crisis, he can deposit his gold and he could be the Rothschild of this generation.
Anyway, that's all I got, bud.
All right, Patrick, time for skin in the game. And I embarrassed myself, did a terrible job last time and just completely whiffed.
Oh, it was
It was
hard for me not to take that side.
Yeah,
of
because
like
the reality is that we were both bullish, and I should have picked another bet because I knew I needed to go high to get you, and I was worried about it, and I should have known the fact that we were both bullish that wasn't going to work.
Well, listen, our listeners win when we were buying a pitcher for.
Well, not only that, they should know when they see both of us leaning one way. Best
Fade
indicator
it.
out there. It's worth its money in gold.
There you go. Anyway, quickly
I
tell
think it's
people
almost
what
worth listening to us just to see what we agree on, so you could fade it.
All right.
Okay.
So why don't you
Let me
explain the
tell
rules?
everyone. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, except in this case. And the currency for the wagers is as follows: a Duke and Duke, a pint of beer, a burger bet, a pitcher, a case of beer, 2-4, a bottle of wine, $100 limit, and a steak dinner. I just actually like to make a quick little aside here. Friend of the show, great macro strategist, Lynn Alden reached out. She is in the Darius Dale camp. She definitely likes the rosé as well.
Ooh.
But she feels that boxed rosé is unbecoming.
Okay.
And she also confirms that there is a seasonality to rosé. It's kind of like no white after Labor Day. There's something, we better figure it out. For when we're serving people, Patrick. If we're allowed to serve it, we'll figure it out. Maybe Lena will help us with that. But anyways, let me continue on here. The winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions. Okay, so we have to do a new bet. Now, let's first of all determine when we're next going to be on here so we can figure out when we're going to settle this up.
Yeah, so
we're taking Christmas off, and then we're running our
a New Year's special that won't
special.
happen. Yeah.
So that means our next episode is
first Friday of January.
January 7th.
Yeah.
Oh, by the way, we got a great guest there. January 7th.
I'm going to be actually doing the show from Houston, Texas.
Oh, nice.
Yeah. It's I'm doing a big mastermind session with a bunch of members.
My only advice to you, put away this bearish oil talk that you're shitting.
I wasn't bearish. I said there's a chance you get good buy on dip.
But okay, you're right. You're just trying to be hoping that it'll go lower so you can buy more. Okay, so we're gonna do January 7th. So it's a fairly long period. So let's pull up the dollar index. We're betting on the dollar, and what am I gonna do here? No. Can we do?
What pair?
Well, there's
What
no
pair
other
you want?
dollar index.
Let's do the Turkish lira.
No Turkish lira. I want to do CAD, but as a Canadian, I'm always so bearish on my currency that I have an inherent bias to not owning it. And Australia.
You want to do the pound?
Do you have a trade weighted index in this? Is there a way for us to do this properly? No, we have to do either DXY or nothing.
Or we could do the pound sterling or something. What do you want?
I'm going to hate myself. Let's do CAD.
All right.
Okay. And now you always talk about CAD. Oh,
no, we'll put
boy,
We'll put the US
properly.
Stuff. Yeah. If we're going to make the bet, we'll do it in the Forex pair.
So you are dollar bull. So you think this thing's headed higher, and I think it's headed lower. Well, let's just go this way. Straight even up. Higher or lower from here?
Done.
So you're taking higher on US, that meaning a lower CAD.
Yes.
Lower loonie. And I'm
the rate's 128.91.
Okay, that's great. That's going to be one of the unusual times when I'm actually rooting for my currency. What do you want? What do you want to do on this? I figure we should do a bottle of wine, but we should let's do this. Let's do a rosé. Even though it's not.
No, you can't do it. It's out of season.
We're going to do it in honor of Lynn and Darius. And what we're going to do it in the midst of winter, so which is just uncouth and very unbecoming, but that's how we roll.
That's how we roll.
Okay. So
it's always cold in Canada. That's why
we're doing a bottle of rosé. Are you in?
Okay. All right, I'm in. All right.
God help me. You know what the most embarrassing part of it is? Having to go to the liquor store and buy a bottle of rosé. I don't want to lose just because I don't want to have to buy one.
Okay, there you go. I'm not going to comment. Let the hate tweets come out
Yeah,
to you.
all the rose
right.
lovers. That
I bet you there's going to be more of it than
the Bitcoiners are tough, but you should see the rose lovers. They're just downright miserable.
They're gonna nail you. All right. Anyway, so
that's it for the show. So thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter at the Market Huddle. Lena's there, having lots of fun, chatting with people, doing some great memes, shilling our merch, all the stuff that she loves to do. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our latest charts and visuals. And while you're there, please like and subscribe to get our latest content. And if you could, please rate and review us on iTunes. You know why. Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna, and you can find me at bigpicturetrading.com. Kev, where can they find you, bud?
I'm on Twitter at Kevin Muir. Unless you're a Bitcoin lover and you want to tell me how stupid I am, at which point I don't have a Twitter account. And you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends, bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
All right.
Okay, let's do the beers.
Well, you know what?
Did it have a soft mouth feel?
I know, that's like kind of strange and weird, eh? They talk about dogs having soft mouths. That's all I can think about.
Oh.
Well, you talk about the dog a soft mouth when they go hunting because you don't want a dog that's chomping down on your bird.
Oh, okay. Never heard that before, but I don't go hunting.
It's kind of funny that I'm telling you about this instead of the mighty squirrel hunter.
Killer?
Yeah, but I've never heard of the term, so that's
really
news to me.
Have you never hunted with dogs?
I only hunt with beer.
No, that is funny. Well done, buddy. Good line.
So how is this beer?
You know what? So I'm gonna. You know what? We gave that 7.5 down the middle. I'm gonna give it a 7.3. It's actually down the middle, but I'm gonna give it a little bit under the line.
Why?
It's just I don't think I'd ever buy it again. Like it was okay. Like I would drink if someone gave it to me. It's not my beer.
Patrick, you drink any beer someone gave you.
Well, if it gave it to
I'm
me,
going to give it a 7.9. I like the pale ales. It's not the greatest, but I'm going to give it a 7.9.
Now, is that with Vegemite or without?
I just don't get the Vegemite. I'm so confused by it. It's so bad. I don't understand how it's still getting made. It's just one of those things. I'd rather eat haggis.
Oh.
Ooh.
I've never had haggis, but I don't think Vegemite's that bad.
Really?
Head cheese.
Yeah, it's like one of those things. Like it's got really savory sort of taste. So even though you might not like it the first couple of times, it's kind of one of those things. It's like, you know what? I think I might get Vegemite this time.
Like, do you ever go buy the Vegemite?
I don't ever go buy it, but I've had it before and it didn't make me hurl. So.
Now, what is
it? That's Lena's thing. It didn't make me hurl. That's a good start.
Okay, so there's also Marmite, right? And so I just Googled it to try to figure out the difference.
Is Marmite that much different than Vegemite? Is one vegetarian and one's not? Or
I think that the
work?
Vegemite is Australian and Marmite is English. But I could be wrong.
Oh, okay.
Vegemite is more intensely gobsmacking than Marmite, which makes sense because Australia is a little more aggressive and gobsmacking, and that kind of makes sense. People also ask, here we go, what's better, Vegemite or Marmite? That's two bad choices. If it's purely flavor you're looking for, I advise choosing Vegemite. What? Like what? It's a bit of a richer and more subtle taste than Marmite.
Oh.
That might be easier to get used to.
I gotta say, I've never tried Marmite. I've only tried Vegemite.
To be fair, I don't know which one I've tried. I kind of put them in the same camp.
I prefer
maybe I love Vegemite and I haven't had it. It's, by the way, it has lots of B12 vitamin.
Oh, there you go. Healthy for you.
Yeah. Oh, Marmite is banned in Australia.
Oh.
Okay, why?
No,
because
wait.
of Vegemite, maybe.
No.
They
It
have a
says
monopoly on
Australia's-
the whatever mite
Yeah.
products.
Huddle might. Australia's government says some communities should consider limiting the sale of popular Vegemite spread because it is being used to make alcohol.
Really?
Oh, it says the yeast-based product is contributing to antisocial behavior in some remote communities.
It's a remote community. You are antisocial by being there.
Yeah,
So-
I feel like you're going to be in trouble for that. You can send all your hate mail to Lena.
I live in a rural area because I am antisocial.
Nice
Rural.
save. Nice
You live
save.
in
Rural.
Southern Ontario. There's
rural
no-
area.
Oh, remember in what's that great show with Tina Fey? 30 Rock.
30 Rock Rural Juror.
You know, Lena, you're my peeps. You knew exactly where I was going with that
Rural
immediately.
Juror.
Patrick's going, what's the show?
Yeah.
What's the show?
What show's that?
Yeah, I know exactly what you're talking about.
Oh, that's awesome.
Yeah,
Have you watched any
Rural
good
Juror.
shows, Lena, lately?
No, I'm catching up on American Office.
Oh, you
So-
hadn't finished it?
Yeah, I think I just kind of watched it here and there, and I've been kind of watching it like sequential order.
Yeah.
Because I only watched
actually-
an episode here, episode there. Never really watched it from from season 1 all the way to
Oh, you're doing like the marathon.
yeah. So,
Hopefully in more than one sitting. You just didn't
Yes.
sit yourself down for,
more than once.
71 hours and watch all
I
this.
did watch something.
What did you watch, Patrick?
The South Park post-COVID special.
Oh.
Oh, is this
wait,
the one
is
where
this
they
from
made
last
fun-
year?
What?
Did they
Sorry.
make fun of Bitcoin and the crypto guys? Is that because I saw on Twitter there was something.
Yeah, there was a scene in that they had in there
Yeah.
that they did, but it was like a 1 hour special, and it was good.
Is that
like,
recent or is that
But you
from-
know what? Like, there's been a lot of South Park episodes that are way funnier, but just they were hitting all of the soft spots in South Park fashion. It was. I actually thoroughly enjoyed it from just the politics of it. It's totally worth watching.
Well, there we go, folks. Patrick with a
South
pick.
Park.
This
Yeah, there you go.
stuns the world.
Yeah. He watched something.
Yeah, and it wasn't Dune, the old one, for the 42-second time. I'd like to contrast that to the new one, so I'm watching the old one more times. Okay, well,
Well, are you
so
guys ready for your Christmas presents?
No,
Or for your other Christmas
I'm not
presents
ready at
for
all.
other People? No?
no.
Not,
How about
not
you?
for Mrs. Macrotourist?
No, I haven't gotten Mrs. Macro Tours anything. I gotta go rush out.
She's in for a
you're-
surprise.
Yeah, I do my Christmas shopping next week on Friday after the show.
With all the-
We don't have a show.
On
Hey, there we
Christmas
go.
Eve, you're gonna be
Yeah,
shopping
That's right.
at a
We
mall.
don't have a show.
We don't have a show. That's it. Everyone knows where to find me. It'll be at the mall.
Hey, did you know, I learned something this week that I had no clue about, and one of the guys on the desk told me. The New York Stock Exchange, and I don't know if this is true, so this is not fact checked, but supposedly they never have more than 3 days where they're closed, which is why you don't get the Friday off and they come in for a half day on between Thanksgiving.
There you go.
And maybe someone could fact check that for me. Tell us if that's true. Is there like, can you think of? I can't think of any times when there's more than 3 days. Can you, Patrick? Maybe I'm wrong. So people, let us know if that's complete bullshit and I just swallowed that line, hook, line, and lure and
Yeah.
sinker.
Oh,
and
there's
fish.
articles about it.
Oh, you're googling it.
Yeah,
Is it
says,
true?
Why can't the stock market be closed for 2 weekdays in a row? Well, that's 2 weekdays, but
And obviously it did 9/11. So it's not like it never happens, but that's the reason, and that they do funny things. We get it off here in Canada. We take off Boxing Day or we take off Christmas Eve. There's something, we have one extra day at Christmas time than they do, and the reason is because of this weird rule.
Yeah.
Did not know that, eh?
Yeah. But man, this. I was gonna be in New York. Actually, I'm gonna be in New York for the holiday week.
So if you're stalking Patrick, please go to New York ASAP.
Exactly.
Oh, speaking of stalking Patrick, we didn't talk about the pub crawl.
Oh, yeah.
Yeah, good thing we
I
kept
finished
going
it.
there in that little awkward spot where it was kind of feeling like it was going to fizzle and we were going to hang up.
When Patrick started talking.
Well, no, I think I fizzled it too. It's a host's problem. If it fizzles, it's the host. But anyways, keep going. Patrick, how was the 12 pubs of Christmas? I did see that you were a real trooper. You did send us
All
not
12?
very. You
Just
weren't
pictures
very
of bars.
Yeah, it was.
Yeah,
it could have been better pictures.
I didn't want
like-
to. I didn't want to incriminate any of the participants on the Twitter.
What I
universe.
loved was I saw that there was a tweet. Hey, I just ran into Patrick Ceresna on bar number 4 or whatever from one
Was
of our
there one?
listeners. Yeah,
Really?
one of our listeners came and met you.
Well,
Do you
that's
not
awesome.
remember?
No, I don't. I was drunk. No.
And so, how was it? Was there any throwing up? Was it you?
No. There was just quitters. It always happens, right? Like you start off with, like if you, it just, there's only
But,
a handful that ever go the distance.
I have a question about the quitters. I don't mind you being a quitter if you're right up front at the beginning. You're saying I'm not going to make it, and you don't do any trash talking. But you ever get somebody that's trash talking and then quits?
No.
Okay.
Or he doesn't
No,
remember.
there's just people that just want to come and say hello and meet everyone.
So there's regular human beings that don't do your stupid stunt, and you call them
Yeah.
quitters.
Well,
So if I had come, Patrick always invites me, and I'm like, I'm not going to see you in on 12 beers, 12 bars, and so if I had come for 2 beers,
yeah, like,
you would have called me a quitter. I would be lumped in the
I don't
quitter.
think-
If he can even pronounce the word quitter.
There's only a core group of idiots that basically are going the distance.
So how many are there? How many marathoners are there?
This year was actually impressive. I think 8 guys finished it.
Oh, wow.
Yeah, because there's been years.
I'm
where
surprised
only
you
3
were
of us-
able to count at the end of the night.
Yeah,
Have you
no,
ever not finished it, Patrick? Is the question.
Yeah.
Oh, really?
Yeah. But I've finished like 4 out of 5.
That was before he got his liver transplant.
What was the circumstances surrounding the
I don't-
DNF?
I'm not sure actually. What I'm trying to think back. But I've got a pretty good track record. There's very few that have gone the distance as many times as I have. So I'm gonna just say
There's
leave it.
pictures to prove it, I'm sure.
Yeah. But it was good. Always there's a few guys that pass out and a few guys that you have to throw in a cab and just get them out of there. But
So by the 10th and 11th and 12th, it must be getting pretty woozy and tough to concentrate. And when you walk into that 12th bar, they must I can see the eye rolling that must occur.
yeah.
But you guys don't play any games or anything in each
No.
pub.
No. You have to be incredibly discreet because they won't serve you if you're a bunch of hooligans.
Have you
No,
ever
you don't
not
have to be
been served?
hooligans.
What?
Have you guys ever not been served?
A few guys, yes. Like they'll let the majority in, but if there's a few of them that are walking in like they're completely plastered, then they'll
Wow.
just send them. They'll send them out.
And so do those
That's-
guys get it DNF? Did
Yeah.
not finish?
Yeah.
Maybe that was the circumstances
Disqualified.
surrounding your disqualification.
No, that wasn't. No, it was a good time.
I
though.
have
It
a
was
feeling
great.
you know the circumstances around your disqualification.
Yeah, and I'm not
refusing to
sharing
say.
it. Yeah, absolutely.
What
Putting me
his
on the
friends
spot.
don't realize is that he prepares for this 12 pubs of Christmas every
train.
Friday for the entire year,
He's in
drinking
a,
with us.
he's in a strict training regiment.
Yeah,
Absolutely.
he's training every Friday, drinking his beers, and his buddies have no clue that he's been training all year for this 12 pubs of Christmas.
no clue.
Do you get to choose your beers every time, or can you choose? Or
Yeah.
Is it
You-
dealer's choice? Like one person chooses.
choice.
No, because not all the bars have the same beers, right?
No,
So
but
you-
the
So
deal
what-
is
what
only
was your-
you go-
one person chooses for the whole
I,
group.
I
and then-
drank a lot of Guinness, and
I would do that as well.
And
That's
I-
a quality.
and
that's
I
easy to
completely-
get down. No,
But
that's
and
it's-
I
a
it
avoided
makes you
I
so
avoided
full.
all IPAs.
Like,
It is
you
a little
get
bit of a-
so
it-
full.
It's a little bit like eating a loaf of bread, but
Yeah,
no,
like
that-
after
but-
like 3-4
But Lena,
pubs,
it's
you'd be
only a
so full.
4.2%. So the
Oh,
thing is
but
that
you're, like-
it's sort of like sneaking in a light beer. It
Yeah,
actually
but
allows
like
you to go the
pure
distance.
volume of it, it's so heavy.
And it's still the same quart.
Patrick, I
pint.
spoke to somebody. I think it was on our was it on our show, Lena?
I don't know.
Because Lena listens to our show. Patrick does sometimes he taps out, doesn't listen to the guests. But there was a guest, and either they told me afterwards, or maybe it was during our show, and they were English. They were American or Canadian. I can't remember which. And they moved to London, and they had started drinking Guinness, and they thought it was so bad, and they were like, "Oh, how can I stomach this?" And then they got liking it, and they eventually appreciated it. They liked the temperature, how it's served room temperature or whatever.
Oh.
And then the most interesting part was that he remembers saying something to the effect that before he left to go overseas to England, he remembers that the snobby English would come to America and say, "I can't drink your Guinness. This is crap. This isn't real Guinness," or whatever. And he went there and drank Guinness for many years and then came back and he said, "I can't drink your Guinness. It's crap." He became like the snobby English.
What was so different about Guinness, like in North America versus Guinness?
I can't remember. Well, first of all, I don't know, Lena. I don't know.
Maybe it's the freshness. I don't know actually know. But it could
I
be.
went to the Guinness factory when I was in England or Dublin, sorry, and it's
you better get that
awesome.
right.
Yes, I know. I actually had a fellow come the other day, and he was Scottish and I guessed Irish or one of them. It was the other way around. And he says,
Travesty.
no, he said, as long as you didn't guess English. And he was fine with it. He didn't care.
All right.
He didn't mind being mistaken for either. I can't remember which way it was, but he didn't mind being mistaken the other way. I think
just
he was
didn't wanna be
Scottish, and
mistaken
I
for
called him
English.
Irish, which you
Okay.
shouldn't. You should usually know, but anyways, the.
I just don't guess, period.
Oh no, I like to make a complete fool of myself and get it completely wrong. But when I was in Dublin, I went and we were with the family, and my kids were, I don't know, it's
Much
really-
younger.
Yeah, like 6 was my youngest, and I had 6, 9, and 12-year-old,
It was like 10,
and
15
and
years
so
ago.
we had their first beers.
Oh, wow.
Yeah, it was great.
Start 'em
I got a
young.
I got a little video of it. And my big joke was when my son is youngest, I said, "This is your first beer, and I very much doubt it'll be your last."
Hey, that's a good lesson. I think
Yeah.
it's always good to drink with your kids.
Yeah,
Well,
there you go.
Hey,
like Patrick,
my-
you mean? Like so?
No, I
Patrick
said like
be
my
taking,
dad
like,
poured me my first drink ever when I was like, I don't know, a teenager. He's like, you need to know how to handle yourself when you go to parties because you will go to parties and there will be alcohol.
That's
you need
true.
to know how to handle yourself. So he gave me my first drink, like a big thing of vodka or whatever it was.
Well,
A big
Yeah,
thing of
terrible.
vodka. not a shot of vodka. A big
he
thing
gave
of
his
vodka.
9-year-old a full tumbler on the rocks.
You gotta know how to handle yourself at parties.
It's like those parents that catch their kids smoking and then make their kids smoke the whole pack
Yeah,
so they'll get
exactly.
sick. That's Lena. Lena at 9. Okay.
Okay,
You
Dad,
wanna
I'll
This is how
drink
it's gonna
it.
go.
Yeah.
And he made you smoke a pack of Marlboros at the same
That's
time.
right. When you drink, you're gonna want to smoke. So here you go. See how that
Actually,
feels.
All right.
do you know that is funny? Nobody. I would have thought you would be too young to have that feeling, Lena.
What do you mean? What
That
feeling?
when you drink, you want to smoke.
Oh, you're never too young for that. are you?
No, because it's like it feels like this next generation they don't even understand. Like Patrick,
Oh, they're
did you-
probably like, what's
did-
smoking? Who smokes these?
Well,
days?
because Patrick, he likes to make himself sound so much younger than me, but he's really not. He's just like a couple of years. It's because he has all his hair, so he looks younger. But Patrick, you remember going to the bars, and even if you weren't a smoker, you would smoke.
Yep.
Yeah, people used
you-
to call themselves like social smokers. Like, oh, I
Right,
only
and
smoke
you-
when
it would
I
be- it would-
drink.
It would be a very unusual person that didn't smoke at all. That there was zero smoke, and when you go to the bars, you would just reek of smoke
Oh
coming
yeah,
out.
even the next day,
disgusting.
like your pillow, your hair. Like,
Yeah. It's crazy. It's crazy.
Remember those
to
days
think
when you
about.
used to be able to smoke in malls? They used to have ashtrays in the hallways in the malls.
No.
Do you remember?
So I
that?
never smoked. I'm not a smoker, so I.
No,
I
this
would-
was when I was like a teenager. I remember there used to have ashtrays in the walls in the mall.
I don't remember that.
So obviously this mall that I was at was pre-renovation for the new millennium, but there were ashtrays. I remember seeing them, and I was like, people used to smoke in the mall.
Well, I remember the fellows telling me about what it was like on the trading desk. I went on the trading desk in '93, I think, and it wasn't that much earlier that they were still smoking on the trading desk
At work.
and there would be a huge communal vat that they would all stub out into, whatever it's called,
Ugh.
ash out to, and it would be completely full by the end of the
Disgusting.
yeah. And I remember going to
Disgusting.
Montreal even in my day in the early 90s and visiting a client, and back then you could smoke. Because Ontario made it no smoking in the workplace, but not Quebec. They were like,
Oh, of
screw it,
course
we're going to
not.
let...
The
we're
French,
still smoking.
they need to
Yeah.
smoke.
So they smoked right until 2000 or something.
Wow.
Yeah.
I remember
Well,
my dad
that-
telling me that he used to be able to smoke on planes. That blew
Oh,
my
I
mind.
remember being on a plane and the people behind me smoking when I was a kid, and it was like you can't get away from it, and you're
that
coughing.
you could
and,
smoke on a plane.
Yeah.
Like in
Oh, yeah.
an enclosed space. That's
and then people wouldn't get a smoking section, and so they would go into the bathroom to cheat, and then they would light the place on
Ah.
fire.
That's why they have those signs now. It
Yeah.
says no smoking, no vaping in the lavatories.
Oh yeah, vaping. But why no vaping?
I don't know. I don't know.
Yeah.
Vaping.
Just to
doesn't-
not
I
make the
don't
other ones jealous.
know. I guess.
Who knows? Well,
All right.
Okay, so
Let's
we're not
wrap.
going to see anyone
Yeah.
before Christmas.
After New
so-
Year's.
Yeah. So just I
Yeah.
guess.
Merry Christmas, Happy New Year.
Happy holidays, Merry
yeah.
Christmas to everyone. Thank you for sticking with us for all this time. It's always a pleasure. We appreciate and enjoy each and every one of you, and thank you for your time. And Lena and Patrick, it's been a real pleasure doing this every year
Yeah.
with you guys. And so, Merry Christmas. I hope.
Merry
Merry
Christmas.
Christmas.
And I guess I don't need to wish you a Happy New Year because we're going to do one more show before the.
That's right.
All right.
Okay, have a
Cheers,
Merry
everyone.
Christmas, everybody.